Crypto versus stock market. What's the big difference? 2-minute guide. All right, let's talk crypto versus stocks. They both involve investing and can make you money, but they're fundamentally different. If you've ever wondered which is right for you, understanding their key differences is a must. Let's get into the breakdown. Difference. The first major difference is volatility and market hours. The crypto market is a 24/7 global market that never sleeps. It's known for extreme price swings, up and down, in a very short time. Think of it like a roller coaster. The stock market, on the other hand, operates on specific hours, typically Monday through Friday. It's generally less volatile, though major news can still cause big swings. The stock market is more like a steady climb. Difference number 2, regulation and centralization. Next up is regulation and centralization. The stock market is highly regulated. Governments like the SEC in the US have strict rules in place to protect investors. This makes it more centralized and structured. The crypto market, however, is a new decentralized frontier. It's built on a peer-to-peer network with no central authority controlling it. While some regulations are emerging, it remains a much less regulated space, which is both a risk and a draw for many investors. Difference number 3, asset type and technology. Finally, let's talk about the underlying technology and asset type. When you buy a stock, you're buying a share of ownership in a company. Your value is tied to that company's performance. Cryptocurrencies are completely different. They're built on blockchain technology and represent a new type of digital asset. They can be a digital currency like Bitcoin, a platform for decentralized apps like Ethereum, or a token with a specific utility. The technology itself is the core of its value. So, to summarize, the crypto market is a 24/7, decentralized and highly volatile space powered by blockchain. The stock market is a regulated, centralized, and generally more stable market where you buy ownership in companies. Both have potential for growth and come with risks. The key is to understand the differences and choose what aligns with your investment goals. If you found this breakdown helpful, give us a like and subscribe for more insights into the crypto world. What's your favorite market to trade? Let us know in the comments below.